It's about that time of day again. Welcome back to Nightly Newsletter, boys and girls. Joseph James here. It's Tuesday evening, October the 18th, 2016. Boy, we got some great opportunities going into Wednesday's session after some pretty decent moves to finish up today's session on a Tuesday. Crude oil is roaring higher after the inventory report late this afternoon. The S&P is trading with a beautiful bullish spike in range, maybe a spike in triangle. Gold also bullish and trading inside of its own range, and the euro appears to be consolidating around that big round number of 10,000 ahead of the ECB report later on this week. Now, I know I told you guys I wouldn't be doing this newsletter tonight, but I decided to push back my meeting another hour this evening and try to get this video out to you guys because, one, I know you guys really appreciate the hard work I put in every evening, and two, I kind of enjoy doing this every evening for you guys, and I would miss you here if it wasn't here this evening. So, got a great newsletter in store for you guys and gals tonight. Plenty of reliable trading opportunities setting up for tomorrow. We get the schedule to look at. We get a plan to put together. Before we jump into the charts, though, please don't forget the only place to watch the full-length version of this newsletter is here on my blog at sidewaysmarkets.com. If you're watching the video right now on the YouTube channel, not to worry, there's a link in the description of the YouTube video. Follow that link, come over here and join me on the blog. And while you're here watching the full-length version, don't forget, join the mailing list. I'll send you an email every evening when my nightly newsletter goes live. Download those charts right below the video tonight. You can download all the charts and have those ready on your computer for tomorrow. In the upper right-hand corner, please don't forget to grab your free pass. If you're brand new here to School of Trade, you're not a member here yet at School of Trade, I get a free pass to show you what all the commotion's all about. And don't forget, if you're new here to the SOT community, we get a great frequently asked questions page on the right-hand side of the blog, right? And of course, I'm always here standing by to help you guys out if you have any questions along the way. Let's jump right into it here. I got to get moving here for you guys this evening. Thanks for sticking around with me here tonight. Let's take a look at the calendar here for tonight and tomorrow, and then we'll jump into some charts here. First of all, we talked about this in last night's newsletter. We get some major news coming out of China here this evening. 10 o'clock, we start hearing from the GDP, the industrial production, the retail sales. You know there are going to be quite a few eyeballs on these news reports tonight. If you trade in the overnight session, you do want to be aware of that. And of course, looking at tomorrow for Wednesday, October the 19th, we get the labor market report at 4:30 a.m. for the London session traders. And then we're going to go right down into the U.S. session. 8:30 housing starts, 10 a.m. from the BAC. And of course, we got the 10:30 inventory report tomorrow, right, for all you crude oil traders. So we got news at 4:30 a.m. in the London session. We've got news at 8:30, 10 a.m., and of course 10:30 a.m., right? Of course, market moving events. Then tomorrow night, we got the 8:30 p.m. labor force survey, right, from our good friends down under. The big news tomorrow will be at 8:30 and 10:30. We got, of course, the housing starts. Watching a lot of people using that metric right now in the real estate, in the overall real estate economy right now. So housing starts tomorrow morning at 8:30 a.m. And then, of course, if you're a crude trader or an S&P trader, right, we definitely know that there are going to be opportunities here around that petroleum status report. The one thing I always remind you guys, though, is there aren't that many news events that apply to one market. This is one of them tomorrow morning at 10:30 a.m. I always recommend give it at least 15 minutes before that news comes out, and at least 10 minutes after the news come out, right? Let that volatility calm down, right? Trade around it. Usually I'll do a 5-minute buffer around major news, right? But with the inventory report on crude oil and a little bit of a dose in the S&P tomorrow around that inventory report at 10:30 a.m. Don't forget, we'll be watching this tomorrow in real time with all of our students in the trade room. One more thing which will apply later on in this video. We got the ECB announcement at 7:45 on Thursday. And in case you haven't been paying attention, there's just a little bit of stuff going on in Europe right now. So that will definitely be on the radar for traders. And we're already starting to see a bit of that on the euro. We'll take a look at that in a moment. So really tomorrow, that ECB shouldn't have too much of an impact, but you'll see in a moment we're right around that big round number on euro. So that may continue to have kind of a lingering effect here as we go into the latter half of this third week of what has been a beautiful and very successful month of October. Hope you guys are doing well out there as well. Let's jump right into it here. And man, oh man, crude is bullish and trying to hold above the highs of today's range after this evening's API report sent prices roaring higher. Boy, the bulls clearly have control right now. And this type of move off news two things you want to be thinking. These types of move-off news usually result in a second leg higher, which has that target up at 51.45. We'll go into more details on that with my students in the trade room tomorrow. We'll look at all the API levels tomorrow morning in real time at 8 o'clock Eastern time, right? So if the bulls can hold this pullback, they're gunning for that 51.45. That 51.45, always kind of a lingering target on inventory days. Also, keep in mind, we also see this news gave us a spike, right? This real strong move in one direction. It's called a spike in my world, and most spikes result in either a spike in channel or a spike in range. So we'll definitely be looking for that in the short term as the overnight session develops into London tomorrow. With so much strength right now, we can assume that buyers will be looking to buy any pullback to support, and some bulls may even just slap the buy button, holding on to that 51.45 target and just ride a real wide stop. But let's be honest, the most reliable opportunity for the bulls will be on the next pullback. Sellers, on the other hand, can't mess with this type of move, and their best option will be to wait and see if the next pullback can get below the range high, and then they can start looking for a move back down to that 50.63 measured move area, which is where this whole party to the upside, right, where this whole news reaction got started. So, boy, before the news came out this afternoon, we had this market in a very good example of a multi-directional trending day. Boy, this has been nonstop ever since we heard from OPEC last Monday, right? Buyers on the way up, plenty of ways to buy on the way up, and then of course selling opportunities on the way down, then round out that bottom, buying on the way back up. A multi-directional trending day. It's really just one big trading range. Now, the news did a really good job at breaking out of that trading range, right? Without that news breakout, we'd be thinking we're going to sell back into that range and come right back down. That plan's probably not going to be as effective anymore, right? This amount of strength is going to deter any sellers right now, right? The sellers are going to be buying, the buyers are going to be buying, like I said, but this type of strength move, there's a lot of traders here will just buy, right? They'll just hit the buy button, knowing that if it does pull back, it will probably come right back to where it came from, because we assume that buyers will be scaling into this and buying into this as it pulls back. So where we break through the high of this range, now, you know what I'm going to say next, right? We're looking for that breakout pullback, right? So the moving average now, the moving average is way down here, right? And this goes to show you just how strong that breakout was, right? There's your moving average. So this moving average needs to come follow here and help these buyers hold above the high of that range. The high of that range is really going to be a very important line in the sand. As it sits right now, they shouldn't have any trouble at all keeping price above the high of the range. But tomorrow's an inventory day, and we've learned never to say never, right? And never to really count out both sides ahead of major economic news. Really, at this point, what you want to be thinking is strong spike. That spike will either result in a spike in channel, right? New higher high, pulls back, right? Spike in channel, or a spike in range, right? A spike in range. We have a couple of those we're going to look at here tonight on the newsletter as well. Like I said before, I'm sure there are going to be some really aggressive buyers right now that have a kind of a taste for some risk tolerance. But for anything like me, I'm not the most risk tolerant person in the world. I like to use small stops and highly reliable opportunities here. So if you're like me, you're going to want to be waiting for a little bit more information. Now, waiting for more information, you might miss a little bit of kind of the sugar rush of this thing going higher here. But typically what will happen is a move like this will pull back, make a new higher high. That new higher high now gives me the ammunition I need now to find a spike in channel. And if we do get a spike in channel, buyers now will be looking for opportunities here to buy on traps, right? Basically buying low and being able to buy that move back up, right? So wait patiently for a new higher high after a pullback. That'll give you the first opportunity to buy the pullback, right? And then keep buying those subsequent tests of those lows, right? Again, in a bullish market with a bull spike in channel. Another option here now is going to be if it does pull back, then make a double top rather than making a new higher high. Think of it this way. If it pulls back and makes a new higher high, then it becomes a spike in channel, right? Buy the low of that channel, right? Buy the buy the traps below these, right? Below that channel. Just keep buying low. If we do see it pull back, but instead of making a new higher high, it makes a double top, kind of like this right there, right? Kind of like that example right there. This could easily have been a spike in range, right? You can see they tried to hold that low. Bottom line is spike, pull back, double top. Now that becomes your spike in range. It's very, very similar. We're going to take a look at this on gold and euro have examples of this. Gold is a bullish spike in range here. We're going to want to focus on buying the low of that range tomorrow. As you can see, we don't quite have enough information yet to be able to really sink our teeth into where that low will be, but these are the things we're starting to think about whenever we see major news. Major news creates a spike. Spikes usually create, right, a double dot move at some point here, right? That'll be the final target there for the 145, and again, either spike in channel or spike in range. So buyers are waiting for a pullback. Buyers are looking for again, depending on what we get. If we get that spike in channel, the buyers want to buy the low of the channel and buy those traps, right? If we get a spike in range, buyers want to focus on buying below the range low, and then buying that breakout pullback, right? As long as that move can go and stay above the high of that range. You'll notice when I talk about ranges, when I talk about channels, I'm oftentimes repeating myself. I'm using the same techniques, just applying it to whatever I'm seeing that day. This is why it's very easy when you come out and join me as a student and you learn like this and we repeat this stuff every day. It's all the same stuff. It's just we're trying to apply it to whatever the current market conditions are, right? And that repetition, right? That's the stone that hones the knife of success. I'm looking forward to seeing you guys tomorrow in real time, right? In our trade room. Now, what about those sellers here? And again, kind of going back to the buyers here real quickly here, there are going to be a lot of sellers that are probably going to be trying to fade this move back down in. I was like this when I was a new trader. You may have thought the same thing. Big pops equal big drops. That's true sometimes, but it's not a reliable time to be a seller right now. So what you want to be thinking is there are probably going to be traders who look at this and think, it can't keep going forever, right? There's a Fibonacci extension up here. I better sell. You know what I mean? No, it's not a reliable spot to be a seller because your stop losses at those highs are sitting ducks right now. So you're going to see some sellers here trying to fade this move back in. That's what you want to be thinking as this thing pulls back, especially on this around this high of the range, right? If it does kind of slip inside this range here, sellers trying to fade it back in. Well, if they fail, right, that gives you a great opportunity here to be buying low. If you're going to be a seller right now, you really got to be careful. You either want to mess with this bull market here, which I can't recommend, or you're going to have to get back below that range. And ultimately, what you're going to want to see here is buyers can't hold the pullback. Strong move in and then hold that move down. That's going to be really the best option here if you're going to be a seller. I have to think, though, there's going to be some significant support, though, sitting around this 50-63 area because that's where this whole party got started. You have to think there are a lot of buyers who are going to be looking to buy that area just because they didn't want to buy the reaction of the news. But if it comes back into that 50-63 to 50-60, 50-70 area, you have to think there's going to be a lot of buyers there. So, of course, it's either going to be selling off the high, right, or get selling here, right, or get selling below that area. Right? That will definitely be your area of interest there if you're going to be a seller. So get back below the high of the range, right? Get back below 89, hold that pullback. That'll be your first shot. And then again, I wouldn't recommend messing with this 50-70 to 50-63 area because I would assume, right, if I'm a long-term buyer, I'm looking at this big move higher and I'm going, man, I would love to get a chance to do that again, right, and get back in where I may have missed that opportunity here before. So buyers, heads up on the spike in channel, heads up on the spike in range. We're going to talk more about that in a moment here on some new charts here, so you can apply that right to crude tomorrow. Sellers, be careful, right? Be careful. The key word for sellers right now is strength. They're going to need to see this market really collapse back below the high of that range and then hold a pullback, right, for a move back.